What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the S&P 500 and the SPY, break down some news that came out involving the debt ceiling and inflationary expectations that did play a big role in why the market dropped today, and also talk about this chart right here involving the debt ceiling and the S&P 500 and what I expect to happen to the markets moving forward. Before I break anything down about the chart, still before I talk about what's going on with the S&P 500 and why you should be very careful and cautious during a time like this, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner, so take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. The last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo and deposit $100 into the account, you're guaranteed up to 10 free stocks, and any could be a free Tesla share. The offer ends in just a few weeks. Check it out before they run out. With that out of the way, let's get on with the video. I apologize, guys, if I do cough sometimes in this video. Not too long ago, I went to a hairdresser, and my barber ended up cutting my hair, and they came very close to me, of course, and they were actually, it seemed like they had a stuffy nose. They may have had a cold or a flu, and it seems like they passed it to me, unfortunately. And it's nothing too serious. I just have a small cough, and that's about it. I feel completely fine. I'm able to like run outside, and I don't really feel any sickness except for just my cough. I don't even have a stuffy nose or anything like that. So I hope I remain this way. I feel fine, and just a minor cough is all it is. And I apologize if I do cough every so often. I think there were some signs of it even yesterday, but I'm fine. Nothing serious. You know, I've tested negative for any like major viruses or anything like that, and I'm completely okay. I'm still going to talk about the stocks right now, and I'm not going to break down the charts in this video though. I'm going to save that for a little bit later. I will just talk about SPY, but I want to break down the news that came out because that's very serious. Okay, and what I expect to happen to SPY going forward because of it. So the news came out and we had some very bearish news. The market started off reacting to Bowman from the Fed. She came out and said that inflation is still too hot and the Fed has to remain restrictive. And then after that, more news came out from the Michigan consumer sentiment data. And it basically showed us that sentiment is dropping. The market is becoming a lot more fearful because of what's going on with the debt ceiling. And you know, when fear comes in, I mean, the market tends to react quite negatively to it. That's part of why the market started to sell off. But what's worse is consumer expectations for inflation. They're continuing to go up. The longer term inflation expectations rose again after the University of Michigan gave their 5 to 10 year expectations as well. And the survey is showing a 0.2% increase. I believe this is one of the highest increases we've got in a very long time. I think the highest increase in like the entire year. So people are expecting more inflation, higher rates of inflation. And why is this? There are many reasons for it. Typically during the summertime, we tend to see prices increase a little bit. That also happens because of a drop in an increase in demand, and also because of people going out a lot more often. Also, supply chains could get disrupted from some areas. People start to consume a lot more. And then the biggest thing, which I noticed, is I think Iran announced that they're uh, committed to cutting oil production too. So this is contributing to the OPEC plus situation where over 1 million barrels of oil or something like that could get cut in production very soon, possibly during the summertime, which could lead to another surge in gas prices. If that happens, right, another big surge, it's going to bring a lot of other prices up with it. Not just gas, not just energy, but other things too, because the cost of travel and transport and getting more things is going to go up, leading to more expenditures for businesses. And once again, it's just a mess. So there is a risk of that, right? Especially later on approaching the summer. I would say by like June time, there really is a risk and we have to be careful. Now, with the whole debt ceiling fiasco, I believe Biden was supposed to meet with McCarthy, but they delayed the meeting, which is leading to more concerns. And obviously, politics is going to make a lot of headlines. It's going to affect the whole market, and it's just a total joke in my eyes. But here's my point. Okay, what tends to happen is the debt ceiling will get raised. It's almost inevitable at this point. It's going to get raised eventually. Our economy is not going to sustain itself or function if they don't do it at this point. We're dependent on them raising the debt ceiling, and it's extremely likely they will do it, almost guaranteed. But here's the thing: they don't always just raise it instantly because different parties have different ideas, ideologies, and etc. So it's hard for them to come to a consensus when it comes to the way that they raise it because there could be different strings attached to raising it. Some parties may demand less governmental spending, for example. Some may demand less money printing, or who knows, right? There are all these different contingencies. But the bottom line is what tends to happen is they delay it over and over and over again, and they don't race until the last minute, or they could even go overboard, which is just ridiculous. But it could happen, okay? And when we get closer to the deadline, which I believe is approaching in early June, it's going to lead to more volatility and more fear amongst investors. So this is why, oftentimes the market has sold off as we approach the big day. Look at 2011, for instance, the debt ceiling right here as we approach the debt ceiling limit right here. The S&P 500 started to drop as the treasury yield also dropped with it. The market just dropped approaching the big event, and we're getting closer to it as we approach June. That's why I've been calling for downside. That's at least one of the main reasons. There's also the Fed speakers and inflationary measures. And on top of that, I know this is a little hard to see. Let me try to zoom into this. Hopefully it's not too blurry. It's kind of blurry, so I'm sorry about that. But the bottom line is the PE ratio of the S&P 500, the forward PE ratio is continuing to rise over and over again. There is an argument that could be made that the market is overvalued and it's due to correct very, very soon. It's a possibility. It's very likely. If you look at the PE ratio, it's just continuing. The forward PE ratio keeps going up and up and up. It's at the highest we've seen it in a very long time. Besides this moment right here throughout like 2020 and 2021, it's very high. So the market is due for a correction, in my opinion. I think it's likely to come soon. Uh, excuse me. I'm referring to just like a healthy pullback, not really a crash right now. But this healthy pullback could develop into it if we get the catalysts, right? If we get a really hot CPI report, if something else happens, it could lead to a crash. As of right now, I can't say that because of how crazy the market is. And you also have to consider that, yes, the market is likely going to pull back, right, over the next couple of weeks, approaching June. But then we have an FOMC meeting in June. And if the Fed pauses, then the market could rebound and get one more rally. So when is the Fed going to have the FOMC meeting? It's going to happen, I think, during the second week of June. So we have time, right? We have some time until then. Things could still change in the blink of an eye. There's no guarantee the market will just keep crashing. It could continue to kangaroo for a while, get a healthy pullback first, and then just try to rebound by June time. But until June comes, right, there's still likely downside. If you look at what big money is doing, or these investors, they're hedging against volatility spikes. And we're continuing to see a lot of these fixed contracts just continuing to spike more and more because they're hedging. They're hedging over and over again. They're expecting the VIX to make a big move. It hasn't been able to do this because the market has just been so wild. And the VIX is it's losing a lot of volatility as of right now, but I believe personally it's going to spike soon. And it's due to do something like that. It's been less crazy recently, but it is what it is, right? Now, let me just mention that the VIX had a bullish divergence, I think, on the daily chart and also the weekly. Let me just double check it. Yeah, I'm not seeing it as much on the daily, but I did see it on the weekly. And I think the VIX is obviously due to see another spike like this. See how it hit 21. It's going to do something like that again very, very soon. I'm very confident about that. I would give it just a couple of weeks, but it's very possible. Looking back, is there a divergence? I'm seeing it more on the weekly. I think there's one right here. Oh, there was one right here. There's no guarantee it's finished yet, but there was one on the daily. On the weekly, there's another one, an even bigger one for sure. There was a bullish divergence forming on the weekly time frame. The VIX is making these new lows, or at least it did very recently last week, but the RSI is trending up. And finally, for the S&P 500, my prediction was we would either get another push up in the market, and then we would see a sell-off coming very, very soon. And then I predicted that the bigger move is going to be the downside, and any upside is going to be like more feeble. It's going to be less strong, and I still stand by that. However, I am seeing signs of a potential divergence that was forming on the 1 hour time frame. I think that SPY is going to get a rebound. Yeah, it's most likely going to get a rebound first. If we're going to try to push first, and then we're going to see more downside again later on. It's going to try to rebound just a bit, but it's not going to be too big in my opinion, because the bigger picture is still more bearish in my eyes. So let me explain. Look at the daily on SPY. I mean, we're forming this head and shoulders. It's still valid right now, right? There is this gap up here around this like 415 area. Could it fill it? I mean, it's still a possibility, but I don't really think that's going to be much. That's just like a little over $3 of a move, $4, less than that. That's very minor compared to this thing dropping like $10 to $15 or even more than that. The bigger move is going to be the downside. I'm still much more confident in us seeing downside, and I'm still a bigger bear right now. Okay, I like to not be a bear or a bull and just react to the charts, but the charts are telling me the bears are going to have a big victory soon. However, here's the thing. I could shift my opinion if SPY breaks 417. If it breaks that, I just don't think that's going to happen. I find it very unlikely that the market's just going to keep rallying, approaching the debt ceiling crisis, and also because of inflation and the Fed speakers. I'm going to talk a little bit about the Fed tomorrow in my video. I need to make a big announcement about them. And then I'm going to talk more about the charts, possibly tomorrow, maybe more on Sunday. I know many of you guys are eager to hear me talk about them. I will talk more on Sunday about them. I know you have to wait, but there's some important things I have to discuss first. But like I said earlier, I'm seeing the same thing I mentioned before. I mean, they could try to prop the market up just a little bit so that Wall Street could start shorting and get better positions. That's what they may try, just a small push up. I mean, if it fails to do so, then we might just see us collapse anyways. But one last small push up and then a collapse is what I'm seeing. Either that or we fail to even push up much more from here and we just start collapsing. I see us filling the gap next week to 406, most likely. We might try to bounce a little bit first before that, but then the bigger move is going to be 406. Then ultimately 399 is coming to fill this gap. I mean, we have a lot of downside coming. That's going to be the much bigger move. I have not changed my opinion. The only thing that changed is me continuing to say a potential balance because of the bullish divergence that developed. It's going to be minor, nothing too big. Small bounce, then a bigger drop is still coming. This head and shoulders is still relevant and valid. The only way for me to change my opinion is if we break 417. I'm not really seeing that right now. Okay? That's what I'm seeing from the charts. Okay? I'm going to be as blunt as possible. Why is the market going to see more downside? There are many different factors. Over the next few weeks, we could have more bank collapses, inflation readings. There's another CPI coming out in less than 4 weeks. And then I think we have PCE coming out soon. Then we have the debt ceiling, which Wall Street's going to use that as an excuse to push the markets down. That's what they oftentimes do. They use this news. They get the articles on their side so their shorts can make them a ton of money. That's part of it, and I believe that's going to be used in that manner. And that's what I'm seeing for the charts. Okay, so please enjoy your weekend. Be on the lookout for tomorrow. I'm going to release another video and talk about the Fed. And then for Sunday, I will talk much more about the charts. Okay, I will talk a little bit about the charts tomorrow too if you want to learn about like the NASDAQ and the QQQ. But until then, just be on the lookout for my next video, and I will be back very, very soon. Thank you all for listening. Have a great day. I wish you all great health, and I want the best for everyone. I have some merch for you guys if you're interested in buying anything like a Eat, Sleep, Trade, Repeat shirt or a To the Moon shirt or a hoodie or anything like that. It should be around the comment section if you're interested. And then finally, don't forget about the Moomoo link. I will be promoting this for just a couple more days until I switch to something else. So you guys have your last chances coming before I switch to something else. Please remain calm, cool, and collected. Do what you have to do and enjoy your weekend, guys. The market to the moon, SPY to the moon, because the long term is still very bright. And peace out.